Hey everybody, it's Ron from Ron's Basement. Thank you and you and you for joining me this morning, Wednesday, November 20 something. It's the Wednesday before Thanksgiving. I wanted to give you a quick update on some thoughts I've had about precious metals, gold, silver, and the associated mining shares. And it has been a rough week. On Sunday, I made a video uh, expressing my gratitude for the fact that the gold price was $1,850 per ounce. I was like, hey, that's still a great gold price. I was, I think rightfully so now, feeling a little uneasy, but I wanted to remind myself that, hey, 1850 is a really good gold price. Well, we all know what happened this week. In a nutshell, the price of gold has been clobbered, and I think the official reason why is that Jay Powell, his term as the head of the Federal Reserve, was extended. Um, that was viewed as hawkish because the other contender was viewed as more dovish, and uh, whatever the reason, the price of gold, well, for that reason, the price of gold was clobbered this week. Now, my only question was that I know that Jay Powell was kind of the odds on favorite to have his term extended. It was, to me, it's a little weird that, like, when what was expected to happen actually happened, that the result of that was like, oh, a surprise, and oh, the price of gold went down. But hey, it is what it is. I know there's a lot of theories about manipulation and everything else, but it's been a rough week, a rough short week. It's only been 2 days uh, to be invested in precious metals and precious metal mining stocks, but there's still reason to be optimistic. I have a couple things I want to talk about. Earlier in the week, I read an article that said that the market is now pricing in 3 rate hikes next year. And this article was from a reputable source. I'm sure if you Google it, I've heard that market's pricing in 2 rate hikes. Now I'm reading the market's pricing in 3 rate hikes. Well, gold is forward looking. So that means gold anticipates the next move. And at this point, what it's anticipating in theory is that there's going to be 3 rate hikes next year. Well, I don't think they're going to be able to hike rates 3 times. But even if they do, in theory, all else remaining equal, the price of gold should not really be affected by that. That's already priced into the price of gold, is what I'm saying. If situations change, conditions change, and the economy slows down or whatever it is, and they now can't hike rates, I would think that would be very bullish for gold. Um, Also, in the past, it's been the case that when they do start hiking rates, when they actually do start hiking rates, that's been bullish for gold because, again, gold is forward looking. Once the rates start to get hiked, which is already priced into the price of gold, then the next thing to be anticipated is, well, hey, at some point they're going to have to cut rates. So, things go down. Now, the other factor that I think is I want to say bullish because it's been not bullish for gold is the U.S. dollar relative to the Dixie. The U.S. dollar is measured relative to other currencies, relative to the euro, relative to the yen, and I've made other videos about this, so I'm not going to go on and on. But the dollar has been quote unquote strong. Um, so we're in an environment where the dollar relative to other currencies has not been supportive to gold. That can't go on forever either. The dollar could weaken relative to other currencies, uh, but at the end of the day, nonetheless, the underlying principle between this quote unquote strong dollar thesis, which is, in my opinion, not correct, is the fact that the currencies that the dollar is being compared to, measured against, are also printing tons of money and are also losing their value. So you've got a bunch of currencies that are compared to each other that are all simultaneously dropping in value. It's kind of like you know, I don't think of a good analogy. Going to a really cheap used car lot and comparing three junkers. You know, this one's going to need a new engine in a month. This one, the transmission's busted, and this one was in a horrible wreck, and the frame is completely bent up. But you can still kind of sort of drive it. You know, it's all these currencies are doing crappy. So that's another kind of supportive factor for the price of gold. So what I'm going to say is that, you know, right now, this period we're in, and maybe it goes down to 1650. I don't know. I don't have a crystal ball, but I still say that we right now we are in the tightening phase in terms of how it is going to affect the price of gold, if that makes sense. Like the tightening is already going on. So if it happens, gold's already priced that in. If it doesn't happen, that's a good thing. And you know, and on top of that, as a kind of supportive factor, we have, I mean, come on, man, all this debt and the deficits we're running and the money that's still being printed, and the fact that like the only people who really want U.S. Treasury bonds is you know, the Federal Reserve, and I mean that there's a supportive force, several supportive forces under the price of gold. Again, that doesn't mean that it can't drop, because it certainly can. The miners can certainly drop, but the miners are so cheap right now. And even at this $1,800 range, they're still making, most of them are making really great cash flow. So from a value perspective, I think that the miners still represent an outstanding opportunity. Thanks for watching. I hope you were able to grasp the two concepts that I was referring to. First being that, you know, rate hikes are already priced into gold right now, so we're already in the down phase. Not saying we're going to pop out of it tomorrow or today, but we're already in the kind of the down phase for gold in relation to how it reacts to interest rates. And secondly, that underneath the price of gold, we have this fundamental fact, mathematical fact, that the US dollar is being diluted, is being made less valuable. And that will also act as a force to kind of support the price of gold. Unless I'm wrong, in which case I'm wrong. Thanks for watching. I hope you enjoyed my video. I hope you have a great day, and I'll talk to you soon.